Welcome to our comprehensive Eur Jpy Analysis Report covering September 22nd to 27th, 2025. I'm your host from FX Tech, bringing you the latest insights on this important currency pair. In today's presentation, we'll examine recent price movements, technical patterns, key news events, and trading strategies to help you make informed decisions. We'll analyze the ascending triangle pattern that's been forming and discuss both short and medium-term outlooks. Stay tuned as we dive deep into the factors driving EUR/JPY and provide actionable trading recommendations. Let's begin with a market overview of EUR/JPY. The current price stands at 174.959 JPY, showing a daily change of plus 0.11%. Throughout the week of September 22nd to 27th, the pair demonstrated resilient bullish momentum, advancing from 174.33 to 174.96, representing a weekly gain of approximately 0.36%. Looking at performance metrics, we see positive returns across all time frames, with particularly strong 6-month and 1-year performances exceeding 7%. The pair exhibited a clear ascending pattern throughout the week, with each session establishing higher highs while maintaining support above the critical 174.00 psychological level. This price action suggests underlying strength despite occasional volatility. Examining the technical indicators, we see a bullish bias across multiple metrics. The RSI at 56.325 shows neutral to slightly bullish momentum, while Stoch RSI, and MACD all confirm positive momentum. The ADX reading of 39.056 indicates strong trending conditions, suggesting the current move has conviction. Most significantly, price action confirms an ascending triangle pattern with the upper boundary near 175.00 and an ascending support line connecting the lows from September 22nd to 25th. This classic continuation pattern typically resolves with an upward breakout, supporting our bullish outlook with a potential target of 177.00. Key resistance levels include 175.00 to 175.05, 175.41, and 175.53, while support can be found at 174.20 to 174.30, 173.88, and 172.11. Analyzing the daily price action reveals consistent strength throughout the week. The EUR-JPY pair opened at 174.33 on September 22nd and closed at 174.96 by September 26th, showing gains on 4 consecutive sessions. Notice how the daily trading range compressed from 0.47 JPY on September 23rd to 0.38 JPY on September 25th, before expanding to 0.52 JPY on September 26th. 26 as the pair approached the critical 175.00 resistance zone. This volatility expansion near resistance is typical before a potential breakout. Each session established higher highs, and the pair maintained strong support above 174.00, demonstrating buyers' control. The price chart clearly shows the ascending triangle formation that's been developing, with the flat upper resistance and rising support trend line. 2 major factors have been driving euro-yen movements. First, political uncertainty surrounding Japan's leadership election has created headwinds for the yen. This instability typically undermines currency confidence, contributing to yen weakness across major pairs. Second, the Bank of Japan's decision to halt ETF purchases represents a subtle policy tightening, but falls short of meaningful monetary normalization. The central bank's commitment to maintaining ultra-low interest rates continues to pressure the yen. Looking at the interest rate differential, we see a significant gap between the ECB's 3.75% and BOJ's 0.25%, creating a 3.50% differential that favors the euro. This monetary policy divergence creates a natural carry trade dynamic, supporting EUR/JPY's upward trajectory.
For the short-term outlook spanning 1 to 2 weeks, we've identified 2 primary trading strategies. The long strategy involves entering on dips toward the 174.20 to 174.50 support zone, targeting 175.50 to 176.00, with stops below 173.80. This provides an attractive risk-reward ratio of approximately 1 to 2.5. Alternatively, the short strategy would activate only upon a clear rejection from the 175.50 resistance level, targeting 174.50 to 174.00, with stops above 176.00, offering a risk-reward of about 1 to 2. For risk management, limit exposure to 2% of your trading account per position, use trailing stops after price moves in your favor, and consider partial profit taking at key levels. Key events to monitor include Japanese leadership election results, ECB and BOJ commentary, and shifts in global risk sentiment. Looking at the medium-term outlook for the next 1 to 3 months, we've identified 2 primary scenarios. The bullish scenario, which we assign a 70% probability, involves a decisive breakout above 175.50 resistance, with the BOJ maintaining its accommodative policy and stable or improved global risk sentiment. In this case, target the 177.00 to 178.00 range, with an extended target at 186.31 based on the 61.8% Fibonacci projection. The bearish scenario, with a 30% probability, would occur if Eur Jpy fails to break above 175.50 and subsequently breaks below 173.80, especially if the BOJ signals policy normalization or global risk sentiment deteriorates. In this case, look for a move toward the 172.00 to 170.00 range. The key support zone remains at 172.00 to 173.00. Several risk factors could impact our euro-yen outlook. Upside catalysts include continued hawkish policy from the ECB, prolonged ultra-accommodative policy from the BOJ, resolution of Japanese leadership uncertainty favoring the status quo, improved global risk sentiment, and a technical breakout above 175.41. Conversely, downside risks include an unexpected hawkish turn from the BOJ, deteriorating Eurozone economic indicators, global risk-off sentiment boosting the safe haven yen, a break below 173.88 support, and escalation of geopolitical tensions. Our risk impact assessment shows BOJ policy decisions and Japanese politics as having the highest potential impact on EUR/JPY movements. Key events to monitor include the Japanese leadership election results, ECB and BOJ policy statements, and major Eurozone economic data releases. Let's examine our detailed trading strategies. For the long strategy, enter in the 174.20 to 174.50 support zone, with a primary target at 175.50 and extended target at 177.00. Place stops below 173.80 for a risk-reward ratio of 1:2.5. Confirm entries with price bounces from support, RSI moving above 50, positive MACD crossovers, and bullish candlestick patterns. For the short strategy, enter in the 175.40 to 175.60 resistance zone, targeting 174.50 initially and 173.90 as an extended target. Place stops above 176.00 for a 1:2 risk-reward ratio. Confirm entries with price rejections at resistance, RSI moving below 70, negative MACD crossovers, and bearish candlestick patterns. For position sizing, we recommend a moderate approach of 2% risk per trade, with conservative traders using 1% and avoiding the aggressive 3% allocation. In conclusion, our analysis of EUR/JPY for September 22nd to 27th, 2025 reveals a currency pair positioned for potential upward continuation. The ascending triangle pattern, confirmed by multiple analytical sources, suggests a target near 177.00 upon successful breakout. The interest rate differential and central bank policy divergence provide fundamental support for this technical outlook. Our final recommendations include focusing on buying dips toward the 174.20 to 174.50 support zone, using strict stop losses below 173.80 for long positions, targeting profit-taking opportunities near 175.50 and 177.00 levels, monitoring Japanese leadership election results as a key catalyst, and maintaining disciplined position sizing with maximum 2% risk per trade. Our outlook probability assessment shows a 70% chance of a bullish scenario, 20% neutral, and 10% bearish. For more information, visit our website or contact us directly.